Hi, I'm John Hageman. Welcome to KNN. Today I'm here with Bob Knakal, and today we're going to talk about supply and demand. So Bob, we covered our thoughts of what we think 2023 is going to look like in a previous episode. One of the things we continuously talk about over the years is supply and demand and what's going on in the market. Why don't you first talk about supply and what we're seeing and what we expect to see in 2023?
Yeah, well, Hags, the supply-demand balance in the city is always an interesting one, and I think volume of sales is really much more highly correlated to the supply of available properties. There's always a relatively robust level of demand in New York, which is a great thing. Let's take a look at the supply side first, because the supply of available properties for sale is really more likely to impact the volume of sales in 2023 as opposed to demand. And what we're seeing now is that you see this always when there's downward pressure being exerted on prices, the supply kind of dries up a little bit because people are reluctant to sell for less today than they could have gotten yesterday. But what we're seeing is that this dynamic we've talked about in previous episodes of refinancing risk and having to do a cash-in refi, and either the owner doesn't have the money to effectuate the refi or will choose not to put fresh capital into a building to effectuate the refi. I think that's going to bring some properties to market. We're also seeing that a lot of folks have wanted to sell for a while, haven't, because we've been in this type of market for many quarters now, and there's some pent-up demand from people who want to trade that haven't, and so ultimately those will come to market. But I think there are a lot of reasons why people may be looking to sell some of the properties in their portfolio today. We're seeing a lot of clients redeploy capital outside New York for geographic diversification, which is an important part of a lot of investment objectives today. But we think that the supply of available properties for sale is going to pick up, particularly after we get through the first quarter, maybe even the second quarter of next year, and that increased supply is going to lead to a higher level of volume.
Bob, with that being said, what do you think the types of owners that are going to be looking to sell will look like?
Yeah, most of the folks that we're talking to, the high net worths and families really are a main driver of our private capital business. And so we're talking to those families regularly. Institutions have a variety of reasons why they may need to sell depending on the nature of that institution. But looking at it from a private individual's perspective, we see folks trying to reallocate portfolios, decide what the right mix between real estate and equities and bonds might be. Geographic diversification. Certain areas of the country have done much better than other areas of the country recently. So there are a number of things that people are really looking at their portfolios very, very carefully today, trying to figure out what they want to hold on to, how they can hold on to it if they have mortgages maturing, why they want to hold on to a certain type of asset here and maybe buy a different type of asset somewhere else. So folks are constantly looking at their portfolios, and I think now they're much more thoughtful about looking at their investment decisions. It's not just, let's go buy another building. It's, why are we going to buy that building? What are we going to do with that building? Why do we want that particular product type? What do we think is going to happen in that sector today? So it's been interesting to sit with clients, hear what they have to say, listen to how they're thinking. But generally, I think that people are being very, very thoughtful about is now the right time to sell or think about selling, the various reasons for that. And so I do think that we're going to see an increase in the supply of available properties, particularly in the second half of next year.
We covered the supply side. Now let's talk about demand. Who are the types of folks that are making bets today?
Well, again, Ags, I think demand is very product specific. But we've seen generally there's a relatively small sphere of New York investors that have not geographically diversified, that are doubling down, tripling down on the New York City market. But there are a whole host of new domestic buyers that have come in from out of town that are buying. So many people we're meeting, it's their first time buying. We have to vet them, find out, get proof of funds, find out who their partners are going to be, that kind of thing. So we have good demand coming in from folks from around the country that want to buy in New York today. We've also seen foreign capital, particularly on the high net worth individual side and the family side, that's coming into New York. And the dollar has been relatively strong, so it's still positive to see, even in light of a strong dollar, that we have foreign demand coming in, which is great. The foreign institutions haven't been as robust as they've been in years in the past, but we suspect that will change as we get further into 2023 and 24. But the demand drivers are still very, very good. And so, while we expect supply to increase, there's no benefit to supply increasing if nobody wants to buy those properties, but fortunately there's a really good level of demand, albeit at a reset lower price point, but a good level of demand that's there to meet the supply of properties that have been put on the market.
So now that we've covered both the supply and demand dynamics, right, thinking about 2022 where dollar volume was less than half of the historical peak in 2015, what do you think 2023 is going to look like?
I think 2023 will see a fairly big increase, although, I think if we look at the numbers we always track numbers annually. And we have the 2020 number, 2021, 2022, et cetera. I think it would be interesting to look at a July 1st to June 30th analysis, because it's really played out very, very differently. If you looked at July of 20 through June of 21, July of 21 through June of 22, those numbers are going to look very, very different than our annualized numbers do. And I think the first half of 23 is going to see a relatively muted level of activity. But I think by the second half of the year, we're going to see that pick up quite a bit. How it compares to where we were in 2022 will be interesting. I suspect it'll be higher based on a number of non-discretionary sellers that will be trading. I think that we're hopefully on a path to get back to where we were at the cyclical peak. It would be great for our industry, all of our friends in the business, but I do suspect that we will probably see an elevated volume of sales based on activity that's going to happen in the second half of 23.